Hey, I'm Chris, I'm 16, I'm an investor, a newbie pretty much, but I've achieved good results within my first 10 months of investing, namely 100%. And today I'm going to teach you as a teenager why people are willing to pay certain prices for stocks. As you probably know, stocks make you a partial owner of a company. Based on the number of shares that is available out in the public stock market, you get a certain percentage of the available float. Suppose a company has 100 shares. Every share is $1 each. If I decide to purchase 10 shares, I get 10% of the company for $10. Depending on how the company performs, I will either want to buy more shares, hold them, or sell them in exchange for either the competitor's stocks or something from a completely different sector, depending on the specific case. The stock market, especially the liquid ones, it's where there is a constant demand for trading stocks. You know how you've had those bidding wars where people would pay certain prices for storages not knowing what was inside. Publicly traded companies actually publish their results so you can analyze them. Investing is actually making educated guesses based off of your knowledge and what others who you trust with your money or your will think of the company and how it will perform in the future. The part that should interest you the most is net income. As someone learning how to value a company, you will go through many different types of profitability ratios, measurements, and other ways to value companies. Net income is what's left after the company pays for everything that it has to do in order to generate sales or revenues. Once you do that, you have EBITDA, which is earnings before interest, taxes, depreciation, and amortization. Once you pay off all of them, you get the net income. That type of net income is actually in the GAAP, also known as GAAP, or generally accepted accounting principles, which requires all companies to file their accounts in the same way so that you get an honest and clear definition according to things that you should report in order to gauge how much a company rakes in. Now, there is something called the PE ratio. It is the ratio of the price to earnings per share of a company. To get the EPS, earnings per share, you have to take the net income of a company and then you have to divide it by the number of shares outstanding. Hence, you get the earnings per share, single share. If a company, for example, has an EPS of $10, I'm editing the video right now and I meant a net income of $10. They will have 10 cents per share, right? Because they have 100 shares, $10 in total earnings, net income. So then you divide 10 by 100, which is 0.1 or 10 cents per share. Say I were growing revenues at 50% year over year, all while my competitors are growing their revenues 30% year over year. Say you're willing to pay 70 times my EPS. My EPS was 0.1, right? So you multiply 0.1 times 70, which is $7 per share. And that's the most basic way investors value shares. The next year, I'm going to bring in 20 cents per share. The price is still going to be 7. Say it hasn't changed at all. If I have an EPS of 20 cents per share and the price is $7, the PE ratio is going to be 35%. I messed up once again. I meant a multiple of 35 times, not 35%, because the price is 35 times larger than the EPS in this case. I've grown my net income by 100% year over year. It means that people are likely going to want to pay more for the company.
Here comes the money!
Here we go!
Even more than before. Therefore, it leads to a multiple expansion as well as the stock appreciating strictly based on earnings. A multiple expansion is more forward-looking, it's more speculatory, and it is usually dependent on outside factors such as the overall industry or the stock market as a whole. Let's say people will want to pay a PE ratio of 100 for a company growing their net income 100% year over year. Since the PE ratio will be 100 and my EPS is 20 cents, the stock price is going to rise to $20. Even though we've raised our net income by 100%, theoretically, the stock price appreciated 300% almost.